Good afternoon, everybody. It's the witching hour, and so I'm going to go ahead and begin. I know we're probably going to get a lot more people to join us here throughout the conversation, but I wanted to make sure we start on time and finish on time out of respect for everyone. I'll be recording this, and hopefully if I handle the technology right, I'll provide a link here so that you can go back and replay whatever you've missed and catch up with us. So this week, we're talking about the preface to the book, The Shadow Banking Secrets. It's part of the master class. It comprises pages 31 through 59 of the book. And so I'm just going to jump right into it. And we're just going to kind of go through this together. If you have any questions or comments, feel free. You can be unmuted as long as I guess there's not too much background noise. So feel free to unmute at any time and make your comments. So with that as the housekeeping, and without further ado, let's go ahead and get started. So this preface is called basically the golden rule. And it's whoever understands money makes the rules. It's a little bit different from what past thoughts about this may be. But again, it goes into a little bit of the philosophy that I think Ben and those who work with him have with respect to how things are done and why. Again, more from a philosophical approach, but we start to introduce a little bit of the technical in this chapter as well. At least a brief introduction. So I just thought that we might start out by talking about comparing and contrasting, I guess, a little bit of, again, what the banking system offers. And in this, we're thinking particularly the retail banking world. Those are banks with depositories and, using the fractional reserve methodologies that we talked about a couple of weeks ago. They're able to create money out of thin air, as it were. And so that's kind of explained again a little bit in the first few paragraphs of this section. But then in the master class, we go on to discuss what is a shadow bank. And so there were a few key points here that I wanted to highlight for everyone to just kind of think about and focus on in terms of how does a shadow bank differ from the retail banking world. And so let me just read you a couple of points and you can take note of them and then highlight these. So it goes on to say, what is a shadow bank? Shadow banks are similar to any other bank, except they generally don't deal with the public directly, meaning they're not a retail bank. They're not depositories. They're subject to far less regulation than regular banks, and they have the potential to be far more profitable. And so those are some things there to consider. The shadow banking system, if we want to look at it as a system, and I'm sorry my picture's so pixelated tonight. I guess I'm having some internet issues, but either that or I need to get a new camera for my computer. And Marilyn, I see you've joined us, so feel free to say hi, and we're going ahead and moving forward so that we can record this material for everyone who maybe doesn't make it this week. So I went ahead and started, but feel free to jump in at any time. We're talking about the shadow banking system, and I just kind of highlighted a few notes from the book and the materials. And so that's kind of where we're starting, and then we can take it wherever we want to go. But the shadow banking system, shadow financial system, I should say, is a network of financial institutions comprised of non-depository banks, such as investment banks, hedge funds, structured investment vehicles, money market funds. I would include in there investment clubs and other bank financial institutions. I thought it was also interesting to observe that shadow banking institutions generally serve as intermediaries between investors and capital seekers, creating debt and equity for high net worth individuals, institutional investors, corporations, and profiting from fees and or from arbitrage and investment yields. So those are some characteristics of shadow banks. Would you like to add anything to that? Okay, well, let's continue on then. In this particular chapter, Ben, the author, tends to point out quite a bit of how what he does, and particularly what he's trying to train us in, is the purpose of this master class and the purpose of the book. In short, we are the purpose. We educating us, training us, and helping us get started in this is the objective of this training. And so he's writing it to us and for us. Let's see, what's another thing I highlighted? So we talk a lot about alternative assets, and so I wanted to spend a minute pointing that out. That alternative assets are anything that are not stocks, bonds, or cash equivalents, which means that real estate falls squarely under the category of alternative assets. And so whenever he says alternatives, he's also predominantly talking about real estate. This next section that I wanted to delve into, I think is really important. I spent a lot of time really thinking about this as I was going through the master class, and maybe some of you have too, where he addresses the question, who is this for? Do you find yourself as an individual that's targeted to benefit from what Ben's mission, what Adagio's mission is all about? Can you find yourself in some of the lists of people that he lists here? And so I want to go through this, give you a chance to really think it through a little bit, and be able to really identify with who he's trying to reach, and see if you can identify yourself there. So the first group is alternative investment managers. These are including hedge fund managers, real estate investors, asset managers, lenders, and syndicators, new or seasoned. And they're people who want to protect their business from the next market crash, and who want access to unlimited capital to execute their own investment business on their own terms. So those who want to manage assets, manage these funds. If you see yourself in there, congratulations. If you don't, then let's take another look at another subgroup and see if you fit in this group. The second group he mentions is the retail investor or saver, and those who are not considered financial experts, such as retirees. These are people who have a nest egg from which they need to generate decent income or growth, but who can't afford much risk exposure, and who want to meaningfully improve their portfolio and or replace their financial advisor. And so if you're someone who has some of those pain points and who resonates with that kind of a group, then this could be for you as well. You'll definitely find people who are offering those kinds of solutions for you within the community and within Adagio. And so consider yourself invited, I guess, if you're one of those kind of folks. The third group would be financial professionals. This is one I can relate to. I'm a retired CPA, and so this kind of group is near and dear to my heart. But they're financial professionals who want to scale their business and create competitive advantage over their peers by incorporating reliable, quantifiable investment risk measures and alternative assets that generate demonstrably superior risk-adjusted performance. Let's see. I put myself in the wrong group there. These are the FINRA professionals. My group is down in number 5 below. So we'll keep going. There's real estate agents who want to compliantly serve their investor clients in search of returns that are not available via the MLS or CoStar, and who are in need of, or who are in need of 1031 assets and prefer quality passive investment opportunities, and who want to develop a niche in their investment, the real estate investment niche, and a consultant to their market. So in other words, it sets them apart from other realtors and other agents. This is the next one that I was telling you I resonated with. It's the independent insurance agents, IRA custodians, accountants, and attorneys who want to compliantly serve their clients in need of a better investment option than what they are being offered by their financial advisors and otherwise have available through their retirement accounts. And so this is a really good group to network with, because obviously for those of us who are just starting out and wanting to find investors, this is a great place to network and find them. And then lastly, this is kind of the catch-all for just about anybody who I have not identified already, but that's marketers and relationship builders, and who want to serve and monetize their network by compliantly providing exclusive access to high quality alternative investments like top performing hedge funds. So I don't know, at this point, I'll take a brief break. And if anybody wants to jump in and maybe talk about briefly how they see themselves fitting in, what group they might fit into, or any other comments about what we've discussed so far, feel free.
Oh, hi, Mark.
Hi, go ahead, Marilyn.
Well, I have to look at, I guess, I don't want to say long term, but ultimately my desire is to see others raised up with this knowledge, especially those, the Gen Z, the millennials and so forth, okay? So first of all, there's the perspective of education. That's important for me to have a part in releasing, if you will, okay? So, but it spans really, from Gen Zs all the way up to baby boomers, who really need this knowledge, particularly when we look at the world today and the shakiness of things. So that's where my heart's desire is, first and foremost. And then secondly, if I can at all be an influence with respect to, connecting the right types of folk that help create this type of a fund. That in turn might be able to fund the educational sort of thing that I'm looking at, and maybe other noteworthy projects globally. Mm-hmm. I think that's where my heart is at the moment.
I'm so glad to have you share that, because I don't know if you got our archived meeting recording from last Tuesday, where we had discussed a little bit more of what we were going to do to come together and form a group, a team, as it were. As I reviewed Ben's marketing plan from the week before, I realized that was precisely what he was looking for us to do. He's doing it himself, and education is exactly what he wants us to focus on as well. In fact, as I studied the investment club concept in the book, I went back and reviewed that. And for an investment club to work, we literally have to be focused primarily on education and the investment side of it has to be almost incidental to the education. And as I thought about that, and if you go back, if you haven't watched last week's archive meeting notes, I sent you a link for them so you can open them up. But in that we discussed that extensively, and we talked about, you know, the classes, the types of classes. I've got a whole list, and it just goes on and on and on and on. You know, content that needs to be developed and so forth that we can develop for this kind of education. And I know that we would do Adagio proud and Ben proud if a lot of our education was literally based on the concepts here in the master class, but perhaps explained in a way for a financial novice, along with basics. And so just to put in a shameless plug for you, I'd like to see you help us get involved in that curriculum development in terms of a financial education that we can offer students, and then at the same time teach them by practicum through a process of putting money into the club that they can then vote on which investments the club invests in. And so that's kind of I'm hitting a couple of key points in terms of how we would function as an investment club. But the key point I want to make is it's educational focused. And so I'm hoping quite literally that we'll attract a lot of Gen Zers, was it millennials and whatever other generations, baby boomers, even Gen Xers. So your point's very, very well taken, and very, very much in line with, I think, the philosophy and the direction we're ultimately going to go with this. So thank you.
You're welcome.
Any other thoughts so far? Okay, so what I think I'll do is we'll proceed to talk about syndicators versus financial institutions. And I got to admit a certain degree of ignorance in this area. I've been looking at these contrasts and comparisons, literally trying to gain a better understanding than just the words that are on the page of what these are. I've got a pretty good idea what a syndicator is. It's the financial institutions that I'm really trying to get my head around as they compare to syndicators. And so this might be a bit of a challenge, but we can certainly delve into this, and hopefully even after this recording gets posted, people will watch this and then comment on things that they would like to comment on to add to the value of the class. Anyway, jumping back to syndicators. So what is it that syndicators do? They sell closed-end partnership interests or shares in a project. And it's done on a project-by-project basis. How do they do it? This is quite interesting, based on some things that we've been taught in the master class. But they sell a story predicting future performance based on the markets. And it's interesting because as it's repeated over and over and over again in the master class and throughout Ben's book, risk is not a story. You cannot address risk by exclusively talking about what you think is going to happen, or what you think is the real basis for the strength of a particular investment. Risk is a number, and it's measured quantitatively and based on algorithms that are immutable rather than somebody's story. So I find that differentiation very important. The who. So they sell their private issues to individuals based upon personal trust-based relationships. And again, while none of us can knock personal trust-based relationships, in fact, that's kind of what makes the world go round. You want to make sure that, again, the risk-adjusted numbers and algorithms are what really differentiates the value or the viability of a particular opportunity based on risk. And then lastly, their projects, profit or crash by the market. So they just kind of go where they go, and you just kind of put your money in there. You think he's an honest guy. They're going to do their best, and then you just hope for the best. And so that's kind of the thing about syndicators. There's a note down below that graph there on page 35 that says syndicators chase investors. And of course, we don't want to put ourselves in a position where that's the case. Financial institutions. In this particular graph, there are three types of financial institutions that are compared: hedge funds, private equity funds, and investment banks. Throughout the next few chapters in the book, or throughout the rest of the course, that is, all three of these types of financial institutions are addressed, and they are compared in more detail and contrasted in more detail. But here's a few highlights that I wanted to point out. I don't want to read all of them, but I highlighted a few of them just so that we could kind of see how different they are from the syndicators. Hedge funds, for example, on the what, sell open-ended partnership interests, shares in a strategy based upon a portfolio of equities and derivatives. And so that gives you an idea of how the hedge fund works. They sell, how do they do it? They sell a market neutral historical performance. Under who, let's go over to investment banks for a minute. They sell structured products and client company issues to sales and trading clients' specific appetites. I believe that if I'm understanding this correctly, and I hope if I'm not, somebody will correct me and correct me publicly so I can set the record straight. But I believe this is the essence and the nature of the kinds of products that Adagio designs for their investment banking partners and clients. So again, if I've got that one wrong, let me know. Couple more points on the why. Going back to hedge funds, they profit from their ability to generate consistently strong performance regardless of the market. So that's good. Private equity funds also profit from their ability to generate consistently strong performance regardless of the market. And then the investment bank, and this is a really cool concept, because here you're investing as a bank. You profit from your advisory fees and your broker-dealer functions. And so I like that one the best, but I also know that if we're going to provide good returns for our investors, we've got to also, profit from the ability to consistently generate strong performance regardless of the market. So it's really both in that way. And we're going to show that in the schematic in a minute. So I just want to read some of these quotes from Ben's book that kind of, again, give you an idea of why he's writing it, who it's for, and what his goal is for all of us. Because as the light bulbs have been going off in my head for the last 2 weeks, and I'm really starting to get a clear picture of where we need to go, this is very helpful. So it's something for you to think about and ponder on. It says, my goal is to provide you, this is the student in the class or the reader, with valuable, actionable items that all financial professionals and investors can use to scale their businesses and portfolios dramatically. Alternative assets are just a tool, and to date, a grossly underutilized and misused one. And so I really like that one to really get us sold on what Adagio is doing. And then he waxes philosophical, and I think some of these are good things to read and study. So, pages 36 to 38 are particularly good. Again, let me just go over some of the purposes. Since this is his preface and he's still laying some more foundation, let's just go into some of these things. He said, I want to set clear expectations. My goal for this book or course is to demonstrate the following. The only way to achieve complete financial independence is to possess the ability to create and control unlimited capital. The only way to acquire the ability to create and control unlimited capital is through the closely guarded secrets of the shadow banking system that I reveal in this book. And as I said previously, we're going to discuss exactly how you can effectively issue and control your own money. And so those are really the keys. And we've got some littles in the background that aren't too happy. So I apologize for that. So taking a deeper dive on some of these objectives, let's look at some things, because one of the reasons why I highlighted some of these is that as I've participated in a couple of Ben's presentations where they're rolling out new investment opportunities and new ways for us to work with the investment banks and so forth that we can then get involved and promote, we can see through those presentations these goals and how these goals are met in those products. And so he says, number one, we're going to reveal, or he will reveal, how to choose and even create investments that generate strong returns, even when the markets take a hit. And I don't know how you guys are feeling these days, how confident you're feeling in the markets. I know right now that even though the markets aren't necessarily taking a direct hit for the moment, I'm sure that we can analyze it and see whether they're poised to do so, if in fact they haven't already. But with some of the things that are going on in a geopolitical situation, and I know that factors into finances as well. And of course with the crazy spending of the federal government these last couple of years for COVID, we're seeing inflation. And we talked in the previous conversation about how inflation, the definition, Econ 101 is too many dollars chasing too few goods. But who creates that? And that's the government spending, and actually more than government spending, it's government printing money to spend. In other words, they're doing that through the Fed, through the fractional reserve banking process, and they're creating those dollars out of thin air. And when you start creating trillions and trillions and trillions of dollars out of thin air, then that by definition is inflation. And so as we're seeing the effects of inflation with rising prices, with rising labor costs as people are demanding more and more money, even the activities in the Middle East and in Asia with Russia and Ukraine, all these things are kind of swirling around to create an uncertain environment right now. And so, like I said, I don't know exactly where that's going. I can only speculate, like anybody else, I suppose. But the point I'm making here is that the master class is here to teach us how to sidestep and not be a victim of those circumstances on a macro sense, and be able to create our own monetary system, if you will, through these investments that we can then participate in ourselves and invite others to join us, and hopefully sidestep, which is what he's saying, even when the markets take a hit. And so notwithstanding how people might feel what causes it, notwithstanding how people feel it ought to be fixed, we can all sidestep it for the moment and actually prosper. And I think that's one of the key things that attracted all of us to Shadow Banker Secrets, is because of things that they did, like back in 2008 when the housing bubble burst, and and Adagio did exceptionally well in light of what some other markets and other players in markets were doing. So while everybody was taking a hit, and you think about this, if you had money in mutual funds, on average, you took about a 60% hit on your mutual funds during those years. And yet imagine what you would have done if those monies were in investments that Adagio had designed and put out there, where they were making a consistent, 25, 30, 40%, maybe not 40, I don't remember, but 35, high 30s return. and they didn't take any hits, and they only continue to grow for their clients. And so that's what we're talking about here. Number two, he wants to open your eyes to how you can use these investment management skills to meet the approximately $20 trillion demand of other investors. You know, in the last meeting Ben was in and we were talking, he pointed out that these people all have serious pain points. And, you know, I spent a lot of time thinking about that, writing some things about that as I was preparing last week's presentation for our management team. We talked about pain points a little bit. And so that's the key. And what's really, really cool, I'm going to digress for just a second, but in the Adagio marketing overview, they go so far as to tell us what the opportunities are for investors, what those weaknesses are, i.e. pain points for those investors, and then how Adagio can overcome those pain points, which is exactly what he's hoping we'll do, is that we'll explain to our base of circle of influence those things and show them that what these things that they already acknowledge they feel pain about, we can resolve and help them have solutions for that. It's the essence of attraction marketing, I guess, in terms of, you know, how can we help people solve their problems. And so that's really good. And then the third point was demonstrate how you can use your unique resources and skill sets to profit as an investment professional, whether you are the technical expert who can create risk-adjusted investment returns. That's something we'd all need to learn how to do for yourself or others, or the relationship builder who can aggregate capital. You know, and again, just as a side comment, I'm going to mention here that coming together as a team, as we do this, you know, some of us will be the relationship builders. Others will develop curricula. Others will learn to evaluate opportunities based on these risk-adjusted investment returns and so forth. And so there's really a good opportunity for a lot of skills. And then of course, you know, the marketing and the outreach and all those other things. So anyway, there's enough for everybody to do any number of things. And so, in fact, Marilyn, by the way, the one thing I challenged people to do for our meeting next week is after you've had a chance to review that archived meeting that we had, take some time to think about what you'd like to contribute. And if that's helping us develop curricula, then that might be a really good spot for you. I certainly know that it's needed. Go ahead.
Oh, no, I'd be happy to look at it. And
Okay.
We can also talk offline.
Okay, yeah, absolutely. I'm just kind of putting a plug in there, like I said, a shameless plug for recruiting other people to the team. So I put that in there so that they know we're actually doing something besides just cogitating on the material. Let's see. There's a number of things that he says here that are good, but I want to make sure that we're not going too far afield here to make sure we get through the whole material. Well, let's skip over here a little bit. I liked this comment that he made, and it might be worth discussing, but it's something that I have, let's just say this paragraph convicted me personally. And if it convicted me personally, it probably is going to convict a lot of people. But what it means basically is we need to change our mindsets. And I'll read it to you, and you can kind of get an idea of what he's talking about here. He said, he was talking about how he was first learning about real estate and how he had invested in a Carlton Sheets, no money down kind of real estate. And he was commenting about how so few people really give that training material the respect it deserves. And I do remember probably about 25 years ago, at least, I was probably doing a Carlton Sheets course, and even though I understood the material, from an academic standpoint, it didn't sink into my being enough to realize that, hey, there's some real essence of, in other words, it was just purely a mechanical training to me. It was not a mindset training. And yet I look back on it now and I see how it could have had I allowed it. But let me read this part that he writes, and then you'll see why it convicts me. Ben says, I suspect that the typical corporate employee is unconsciously trained to value a very narrow marketing approach that is dependent upon well-established branding. One thing I can attest to is that the corporate indoctrination instills a false sense of confidence in ignorance that makes moderately successful people highly overly confident in what they know and averse to the information they need the most. That's me. I'm guilty. Guilty as charged. I think that dynamic highlights the need for and value of a book like this one, like this one, as a necessary tool to re-educate the market on how to adopt innovation as a means to create value. And I just got to say, that's exactly how I approached this course and this book. Was I looked at it from, how can I incorporate some mindset changes in terms of how I think about money, how I think about success, how I think about service to others, and so forth, and getting my mind focused on a servant leadership way of thinking and being, as well as, the concepts of attraction marketing, which is more or less based on that concept as well. Recognizing that as I went through the marketing overview for Adagio, that's exactly what they're doing. And so there's a lot of mental work that needs to be done here, not just in terms of absorbing the technical material, although that's a challenge in and of itself, but there's the other side of it that says, how does this material basically transform me into that of a leader to help lead and shepherd others who can benefit from this information, and not only that, but their lives will be changed because they're not suckered into the traditional financial way of doing things. And so that's a really key paragraph. I would challenge everybody who's reading and doing this course and reviewing this material that they take some time on page 46, read the paragraph that's just above the Carlton Sheets picture, and really ask themselves how they might shift some things to find themselves in a role that's more conducive to promoting this. Let's see. He goes into some history of how he brought Adagio online. And I think I'm going to skip that for now because I really want to focus some time here with what we have left on the schematic that's on page 50. I should have taken that and put it on the screen here so that everybody can look at it. But you'll recognize it. You've all seen it before. If you go to page 50 of the book, or if you go to the masterclass, you'll see where he talks about it. But he talks a little bit about how Adagio, he almost woke up one day and found that Adagio had morphed itself into an investment bank. And so there's a schematic there that kind of gives you an overview of how they operate as an investment bank. And this is important because, like I said, in the few meetings that I've been in where Adagio has rolled out products for their investment banks, their consortium of investment banks, and other high-level investors and players, this schematic has always factored into it very clearly. And so the better you understand this schematic, the better you'll understand Adagio overall. And it looks fairly simple, but if you look at it, the middle section is purple, and it's the investment bank, and it has a buy side and a sell side. And you might recognize those. And so you've got investors that are coming in and they're putting capital into these institutions and investment clubs, like what we're talking about doing. And so the capital comes in through entities like us, and then we forward that capital over into Adagio or through Adagio into, in some cases, directly into the alternative asset managers or other investment banks, however they structure that deal. But that's where that money's coming from, and we're a big part of that on that front end. We offer private structured products for the most part. And so these are products that have been designed by Adagio to meet the risk adjusted variables that are required to be met to make this a good investment vehicle for our investor clients. That money then goes into the alternative asset managers, again, based on risk adjusted performance. And so they're not going to put that money into anything that hasn't passed those standards. And that's where the capital flows to. And then, of course, it flows backwards, back out through the structures that have been designed back to our investors. So just to, again, put a little shameless plug in for our investment club that's coming along, and inviting those who want to lead in it. This is what we're going to be doing that is, quote, incidental to the education. Adagio has the same model set up with education being in the institute, and then he's got the other entities through which these things flow. And so we're going to need to do basically a similar thing. If I am to err, it will probably be erring on the side of too much education, but we want to be able to make sure that, you know, both Adagio and any other regulatory entities that might be looking at us or what have you, sees us really performing by the rules, so that we're doing things right and staying on the straight and narrow. Let's see. I wanted to read this to you about Adagio, a little bit more about Adagio, because this is something that I'd kind of skimmed over. I hadn't really picked up on it, but in rereading this and letting it sink in again, this just helps me get a lot of confidence, and a lot of confidence that we can pass on to the members of our investment club of who Adagio really is. On page 50, he writes, Adagio is an investment advisor only, not a broker-dealer, which means that in strict technical sense, we are not an investment bank as defined in most legal contexts. Regardless of the semantics, we have developed a relationship with Morgan Stanley's New York office and work with other broker-dealers to compliantly provide de facto boutique investment banking services for potentially best-in-class alternative investment managers. Okay, and so I like the fact that as we're looking at becoming an investment club and inviting people to join us, we've got the underlying structure that says this is world-class, and that we're able to work with world-class professionals to make sure that what we're doing really does pass that risk-adjusted performance that we're talking about. Let's see, we've already talked quite a bit about alternative asset managers and sponsors, licensed financial professionals, retail investors, financial professionals without the FINRA license, and then other professionals. Oh, the regulatory and trade professionals. That was another one that I thought was rather interesting, is that how much Adagio spends coordinating and assisting regulatory professionals in this area. So we've really got a good program here, and I hope that as you're reading in that preface, particularly there in pages 50 through 59, that you're getting a really good feeling for the quality. I'm very, very happy with the quality of what has been put together for us, and for which we're going to have an opportunity to take advantage of this. And so I hope that I can share that goodwill with you as well. Here's another one I enjoyed as we're going through this. Page 54, Ben writes, he's talking about his background. He's talking about his degree in physics and quantitative finance. And he says, there aren't a whole lot of quants. I guess that's him referring to himself and his profession. There aren't a whole lot of quants to be found operating outside the gates of the big box firms like Morgan Stanley and Goldman Sachs and so forth. But I'm one of them, and I'm providing that skill set to you with the sole intent of leveling the playing field. I love that. He says, with the intent of leveling the playing field and bringing merit-based decision-making tools to the market. And so, so many times I have been in fundraising and I've been the syndicator in years past on projects. And, I've always liked to think that investors would invest based on merit. And yet I realize that for as much as I've tried to create merit for the deals I've worked on in years past, not having this risk-adjusted performance measurement and the algorithms associated with it make me really question some of my past deals. So anyway, I really like that. That's what he's all about, is that he's bringing to us the kind of talent that comes from the big box investment banks, and he's bringing it down to almost a street level for us. And I appreciate that. And I hope as you guys read this that you kind of gain a bigger and bigger appreciation for really what's been put together for us here. I certainly am. Let's see. One of the things that he does is, this I kind of already alluded to this, but I'll just read it out loud again. It says, if you only take away one thing, so if you take only one thing away from this discussion in this chapter, he said, remember that we, Adagio, we were able to generate high double-digit returns across the financial crisis of 2008, when just about everyone else was losing approximately 50% of their net worth. Okay, and so if you do the math on that, how many years did it take for them to catch up that 50%? It took a number of years, and yet they never lost anything. When I'm saying they, Adagio never lost anything, but had large double-digit returns throughout that whole time period. And so if we're going into another downtrend, whatever that may look like, I really appreciate the idea that we have something to offer people, that we can show them some historic risk-adjusted performance, some back testing, and offer them something that will take them through a pain point, which right now may be fear. And if we can get them out of their fear and willing to move in this direction, I think that's going to be a great opportunity for them, first and foremost, and for Adagio and us. And so I think that's important. There's some things that he goes through on pages 56 and 57 that I think are quite interesting. He basically outlines what it cost him, what he had to do, and what it cost him to get Adagio up and running. And particularly, the list is pretty long and extensive and quite spendy. And the thought that we can do this for a fraction of that effort and time and money really says to me, we've got the tools we need to really get up and go at them on this. And so that's my intention is I think you're going to see in the coming weeks ahead, we're going to see some things really evolving here. So on page 57, which is the last page of the chapter, actually, he outlines what we're going to cover in the rest of the book. And so I want to kind of do that with you real quick so that we can take the class and the book and anticipate what we're going to be doing. Obviously, what we're going to be doing next, in fact, for the rest of the course, as we're unpacking this, is we're going to get much more technical. We're going to be slowing down a little bit, letting things chew on things a little bit. I would almost rather, excuse me, I would almost rather us slow down to the point where we're only taking it a concept at a time, a page at a time, or a paragraph at a time if we have to, just so that we can break this apart and really, really understand it And at the same time, while we're doing that, we can move forward and be building what it is we hope to build together for those who want to work together. So anyway, I'm going to highlight the three key things. Secret number one is how to meaningfully measure risk quantitatively. Remember, it's a number. And so meaningfully measure risk to identify assets that will best perform across market cycles, including financial crises. I think this is going to be a really good test for us, and I think it's going to be a rather heady time if we really want to get into it. Number two, how to quickly grow your investment portfolio, that's your assets under management, to a 9-figure level and beyond. And by the way, if you've looked at my analysis of where we would go if we put together a marketing plan similar to Adagio's, which is actually what he's asking us to do, if you read the marketing plan, I've got a plan for us to get to 9 figures. And I think we can do it on fairly short order. If you take a look at that, we're going to be talking about it, and we're definitely going to be right up there playing with the biggest of them. And then number three, how to be compliant as you quickly scale your investment business. I guess as a former auditor myself, with a couple of the largest CPA firms in the world, compliance is something that I feel very strongly about. Compliance is there for everyone's protection. It's not something to be, for us to try to figure out loopholes, trying to get it around or find a way through it or what have you. It's something that we do, that we work with the regulators to make sure that compliance is complete. It protects our investors, it protects us, it just protects everybody. And in a world where it's a very litigious world, and it's a very I don't know, it's a world where people want to go to battle over the least little thing. I think compliance really is the key to being able to avoid those kinds of negative things. And so I don't think we can stress compliance enough. So anyway, those are the three key areas that we're going to be focusing on for the rest of this time as we unpack all the little gems in this training. And so, like I said, my intention here is to make sure that we go slow enough that we can really unpack this. I kind of did these first 2 chapters quickly because even though I think there's a lot of good stuff in them and there's a lot of good meat in them, it was done in a way that I think we've probably hopefully given you all an incentive to go back and re-study those first 2 chapters. But it also provides enough of a platform that now we can dive into the technical detail and have some foundation and philosophy behind it as we unpack it. So anybody else have any other thoughts or comments before we sign off? Marilyn, did you have any parting words?
I'm looking forward to this. There's a lot to chew on. It's presented in quite an orderly way. And it's like we've arrived at our season.
Yes.
At the right time. We're here at the right time.
Yep.
So
the right time in the right place. The right place at the right time.
So I guess that is an added incentive for me.
Well, good. I certainly look forward to meeting with you offline in particular so we can discuss some of the educational curricula. I think a lot of it is out there, and it's just a matter of putting together almost a patchwork of training materials, educational materials, bonus materials, access to classes and things like that. I doubt we'll have to actually create a lot of the curricula ourselves, but at the same time, to have a place where someone can go and have it all in one place is quite a benefit. And so that's kind of what I'm hoping that we can design together is what do they need? What can we pull together? How can we do it in an efficient way? I anticipate that we will be adding content of our own. I think it would be added to a large degree in the form of things like book reviews. What if we were to take Creature from Jekyll Island and review it together as a group, or those who want to be a part of that and discuss it. And then we put that up as content that we've created that we can, offer to our clients, our customers, as a way of helping educate them in terms of the material that's out there. I know that the Von Mises Institute also has a lot of material. They would have all that stuff from the Austrian School of Economics. We'd have a lot of material from Hayek, Von Mises as well, and a number of other economists. And we can even compare and contrast to that, some of that Keynesian stuff, just so that people can be educated in why the Austrian school is more appropriate than the Keynesian school. And, we can even throw some Chicago stuff in there as well if we wanted to. And so, I think, that would be a really big help if you could help us sort through all of that, and then just any number of other things that we want to bring to the table so that they have a real rich education in the things that they need in order to understand at least the underpinnings of risk-adjusted performance and understand why it's so important.
Well, this in of itself is a very enriching undertaking, as well as an assignment. And so, like I said, I think it just has so much more meaning right now. So I'm looking forward to see what comes out of this.
Okay, well, that's good. For those who are interested, we have a meeting next Tuesday, the 15th. It's at 4 o'clock Eastern time, if I'm not mistaken. And that's so that we can have some of our Eastern time friends be able to join us. And so if you can come to that, great. That's definitely a working meeting. It's designed for people to speak up and share their thoughts. And I will have some new material. I'm going to try to avoid going over the stuff that I archived and sent people links to. But if you know of anybody who wants a link to last week's meeting, I'll send that. And if you know anybody who wants a link to next week's meeting, I've got a list of people I'm sending it out to, but I'll certainly be happily send it out to others if they want to participate in the creation and management of this investment club. So with that, I'm going to sign off, and we'll see you guys next Tuesday.